The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 1st of December. We're looking at the Dow down 150 at 47,566. What a fabulous move. 45,728 on the 20th of November. And here we are on the 1st of December, having hit 47,574 on Friday. Pulling back a little bit. You can expect that there's some kind of a pullback. I said to subscribers when I did my video, I actually did it on Wednesday night because I knew it's going to be difficult with family and all that over the weekend. And so we got that out, and I said, just remember that when the captains are out for the week on their little vacation, or at least the people who have those big yachts, they let the not even the second or third mate come in. They say, tell the chef, just make sure that you follow the market. If it's up, you got to be up. If it's down, you got to be down. That's all you have to do. Well, they were following the market and the screen to the upside, and I figured, well, if the real big money missed adding in that big move to the upside, there's a good chance they'll want a little bit of a pullback Monday, Tuesday, and then start all over again fresh. And I think that's kind of what we're looking at. I wouldn't be surprised if by the end of the day, the Dow actually is digesting gains, and we have to wait for Tuesday, Wednesday before it comes back and gets close to the 47,574 level. The S&P had a very strong session going into Friday's close, and that was an A, and I suspect you got a peak A just like the Dow today. It's down 23 at 68.29, some digestive action. I don't know if there'll be all that much because that's what the market likes to do. Trap you by you're not looking at not following the market, and then suddenly there's this huge move, and you keep saying tomorrow, and then it's already too late. What do you do now? Now you have to do some chasing. And then what happens is after the chasing, it takes a bit of a pullback, scares the deadites out of the newcomers, but that's the way the market works. Meantime, very nice action. Look at the QQQ. Down 1, 2, that's it. Down 2.82 at 616.43. It goes, I didn't type that in, I think it was 582. The low was 580.74 on the 21st, 580.74. And has a good rally, 580.74. I think that was 11:21, I think it was. I'll just guess right now. 25. There we go. And where does it go to? It goes all the way to the 618. Let's see the exact figure on Friday. The high was 619.32. So now you see what I've done. I made it kind of conservative. I made this Chapman falling axe formation. That's the pattern that says a long move up to peak D or higher. This happened to be C1, C2 at 637.01. Then it makes lower highs and much lower lows. Eventually it turns around. It's this pattern that I have in the Chapman Wave methodology. It's one of our standard practices to look at these particular patterns. 3 core patterns. There's a move that goes straight up and then straight down. That's one. Then there's an arch, a cup formation, where it goes from one point down and then back again. And then the other one, the third one, is where it goes from a low and it goes to a high and then comes back to that low arch formation. Or you mix 1 and 2. In this case, it's 1 and 3, where it's called the dreaded H. Look at this. The price pulls back and rallies and then fails. It makes an H pattern, takes out and goes lower, lower. Then it goes to peak A and a B, and it takes it out and it goes lower and lower. Then it has just like a single move to an A and then plunges. And now we've got an A with all the, look, the 9-period moving average. Oh, it's today. Didn't do it on Friday, but today, so far, the 9-period moving average is above the 14-period moving average. On Friday, the MACD turned positive. The on-balance volume is pretty good. The gray relative strength index in the daily chart of the QQQ index 100 trading vehicle is good. The 73% in the stochastic is still under 80%, but it is rallying. Nice. All right. So this is the pattern that we're looking at, the H pattern where it fails, and now it's making a potential V-shaped pattern. And what happens is you go from this up with lower highs and lower lows, meaning that there's a declining trend line. I'm going to take it to this. Now I've got a price point that I can talk about. So it's a falling axe formation. What does that mean? It means that it makes lower highs and much lower lows. Then all of a sudden it finds some support. And what does that support do? It turns into a cup formation. And if it takes out decisively the upper declining trend line, it can go to each one of the peaks on the left until it goes to the high. Well, we haven't taken it out yet, but where would the next level of resistance be? It would be the candle of the 12th of November at 624.86. Oh, that's 8 points. That's a long way to go. But anyway, that's what I'm looking at. Maybe by Friday we get there. And look how the weekly chart went underneath for the very first time since it crossed positive. The 9-period moving average of the weekly chart of the QQQ turned positive on the 16th of May. And it stayed that way, and it's still that way. It's very strong. And yet this is the first time that the candle went under, pierced and closed underneath the 14-period moving average. Now it's back above the 9-period moving average. All of that should be a positive. We'll see what happens. Now let's go to the IWM. IWM trading at 246.83, down $1.91. It got to its inside track repellent zone, which is part of the falling axe formation. Let me just draw it in because this becomes important now. Oops, there we go. That's going to be pink. I can make it red. I just like to differentiate between all these different colors. And this is green. I have to move it over there. This is green. And it just says that within the big rectangle formation that I drew, we went under it. Now we're going to try to get back to the top of it. And that just says that if the IWM, the Russell 2000, is able to clear both the downtrend line and the high that was made on the 26th of November of 248.83, you can look to all those next levels of resistance until you get to 252.77, the high of the 15th of October. I think that's in the cards. We'll see what happens. Okay. Whew. And the weekly chart, there's the falling axe formation again. This one is almost like a horizontal level, even though it's down like a 3 or 4 degree, maybe a 3 degree angle. If it can take it out, that's going to be very positive. Now, this month, if we go to 252.78, 1 penny above the all-time high, that becomes a leg B. I could call it an alternate count. I don't see why it should be an alternate count. That would be very, very positive. Now, you remember we were talking about this for the last 2 weeks or so, where the news media just loves to grab. They didn't do it for the last couple of years when there was real inflation. But here they're talking to everyone they can about the airlines and the inflation and how you're making out and everything. And then the airlines turn around and say record levels, and the Black Friday, or was it Monday, highest levels of sales. I mean, I don't know how you put that together, but I think that's very positive. I'll be back in a moment and we'll start looking at stocks. Dow's down 200, S&P's down 27, a digestive session, a much needed digestive session. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
We're back. So the TLT, that is the bonds, iShares 20-year Treasury bond ETF. Everyone's talking about these lower yields. But this doesn't look too good. It's down $1.30 at 88.91. 88.91 is testing the left side low. It broke it. Left side low this 18th of November. The next level of support will be this one right here. It's under the 200 period moving average. That's not too good. At 88.65, we're going to be watching this very closely. Why? Because the TBT, which is the alternative, that's the inverse, is very close to breaking to a new recovery high. That would be above the 34.12, was it 34.09 high that was made on the 18th of November. And look, here we are with a high today of 34 round number, and it's trading at 33.87. And you can see in the weekly chart, there's a W formation forming in the 9-period exponential moving average, which is under the 14, but the MACD is getting really close to closing positive. That would be, that would put yields in a much higher level. Well, I'm watching this very closely. Let's see how the banks are doing. How's, let's see, the XLF. XLF is trading down 16 cents at 53.17. Got an insight, there we go, that falling axe formation needs to get above 53.55, and then it can tackle the left side high of the 12th of November of 53.89. This is the S&P Select Financial Spider Fund, holding quite well. I was a little surprised that it had such a good rally last week, when yields seem to have been falling for a little bit. Anyway, we'll be watching this. Let's go back to gold. So gold right now is trading up only 4. It made a leg C in the daily chart. Let me just tell you, it's not Technical Friday, it's Monday. But I'll still do a little technical analysis based on the Chapman Wave methodology. Look, so we were here, I think it was last week, and when I was interviewed by Tommy, and I said, this pattern that I draw in, this wedge formation, I also drew it with the Chapman Wave inside track repellent zones. So that was the green and pink declining trend lines. That's a resistance area, and this is I call that a repellent zone, and this becomes a propellant zone with higher highs. And all of a sudden, what does it do? It goes close, it gets to the inside of the repellent zone, and then what does it do? It just sneaks its head just above it for a second, and then pop. We got Friday's spike to the upside, and now we're going even higher. So this is a leg C. It's within the rectangle formation, and the rule of thumb with the rectangle formation I have webinars on this. If you want to become a subscriber, you get all my webinars for free. And this explains how if it comes sharply down after making a peak D, E, F, or if it makes a left side high on the flagpole and then comes sharply down and then starts to make higher highs and higher lows, it could get to close to just under or just above the previous high. And then you got to be careful. I don't know. That's a big move to 43.98. It's 140 points. Well, it can do that, but so far I'm just saying that there's higher highs and higher lows. It broke the resistance. The 9-period moving average is over the 14. The MACD is just good. It's not great, it's just good. But the retro strength is improving. Stochastics at 70%. I prefer 80% or higher. And the on-balance volume is moving. So all I can say is that gold is doing very nicely. That's the reason why we kept just a small part of our core position when we took profits on the way up, and then we just kind of sat back to see how does it hold, and it looked like it was going to hold because look at the weekly chart. The 9-period moving average is it's like a support level. Look, it doesn't even break the 9, doesn't even go to the 14. The past 1, 2, 3, 4, 5, 6 weeks, it hit the green 9-period moving average. Well, this is the 6 weeks, so I can't say that. For 5 weeks out of 6, so far, it's hit the green 9-period moving average and then powered higher. So that's really a positive. Look at silver. Silver's even stronger. It's making all-time highs. Here it is at 57.85. Oh, I said all-time highs. I never remember. I think we broke. Yeah. Let me just give this a squeeze. Squeeze. Oh, there it is. Okay. The high that I have, I don't go back to 1980. It used to go back. I don't think I do that anymore. It used to go all the way back to 1980 when the Hunt brothers, and that was the period of the Hunt brothers. Let me just see if I can do this. No, I don't. They stopped it for some reason. It only goes back to 2001. So the last major high in the continuous contract was April of 2011, where it went to 58.94. So we're at 58.61 right now. Oh, look at that. Did I not draw? Oh, I did. Left side, right side price time match to that level. Now, what happens is as you go up the scale or up the price, you have to, the plumb line is going to change. The plumb line could now go right to the very low that was made right there. Okay, let's just do that for fun. So this is a silver continuous monthly chart. I'm going to go from there, from that high. What was it, 58 something other I said? 58 something. And here's the low. This is the low right here. That's the low of in November of 2018, where it went to 20.77. And then what do? I snap it. I go like this, and I say, new parallel. I make this one pink, left side. I keep that one as green, and then I just plop it right there. And lo and behold, we've got at least another 2 months in which to go. Oh, I should type that in. I don't like to put the prices in because you can see all these letters. They keep changing because it gets smoothed out. This is not automated. This is Chapman wave, handmade. This is a handmade chart. Roll up, stand in line, get your handmade 58.94 chart right here. 58.94, and today's high is 58.61. So I would say that it's got 35 cents. It's got it's got December, January, and February to get 5 cents higher. Do you think it's possible? I definitely think it's possible. So I'm going to use this left side there. And that's your trend line right there. Yeah, so we've broken that. All right, so this is Chapman wave technique. Left side, right side price. It's called bar symmetry. And beautiful. It goes back to, what did I say, 2011? not bad for a technique that can go back to 2011 and give you a very good approximation of what's going to happen. We still have our silver stock. Don't want to really change anything there. I wanted to add it the other day. In fact, I had some subscribers adding, and I said, yeah, good idea. Why did I do it for subscribers? Is it a formal thing? I don't know. There's just so many things to look at. But as I say, we have put money to work. We're looking at this very positive. Now the Dow's down 312. S&P's down 36. So this is the thing that I was talking about, that the buyers come in on Monday because they missed out all of last week, and then the market just says, ha, watch this. And it goes right back to the 200-period moving average of 68.22. Now it's going to try to rally again. That's the E-mini. We'll see what happens. Can you look at SOXS? I'll look at it in the very short term because I know that, Duncan, you like to do that. SOXX went to a peak A, B, C, D, E. And now it's just going sideways. SOXS. All right, it's on the 200-period moving average. Kind of stuck there for a little bit.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. I was asked about the SOXS, which is SOXX and the SOXS. The SOXX is the 3 times long, the semis, SMHs, and the SOXS is 3 times short. Look how long a narrow rectangle formation can last. Look at this. You've gone from, let's just say it started right there. That was at 951, and the high was 350. And then a few bars later, the low was 345. At 345, in all this time, the high hasn't been taken out and the low hasn't been taken out. That is amazing, right? Right this very moment, we're seeing enough piercing of that downtrend support area to say that there's a chance that the next bar is going to go below the 345 level. But the 9-period moving average is gone from green to pink to green to pink, and we're going to be watching this very closely. Now look at this. A rectangle formation can last a lot longer than your patience. And look at the SOXX, that's on the upside. Same thing. Look, we can do it the same way. Call this a rectangle formation. Look at that. How long it's been this rectangle. Same amount of time, obviously, because it's a mirror image. But look at the 5-minute chart. 9-period moving average just flipped positive. Somebody watching this for any upside activity, it's down 77 cents at 295.03. That's the positive, the 3 times long semiconductors. But you can't make decisions because as I found so fascinating over not the years, not the decades. And as for trading times, couldn't even tell you. Every time you think it's going right to the door of the horizontal line and it's going to pierce it, it turns around and comes back. Then you think it's going to pierce the downside and it comes back again. And look at the 200-period moving average, this orange line. Look at that support. It just keeps coming down. And look at it on the other side, SOXS. Look at that. Stuck. It's like glued to the 200-period moving average. I love that. Look at the 5-minute chart. It's like the daily, weekly, monthly. Look at the 5-minute chart. It's way below the $3.65 in the 5-minute chart of the 200-period moving average. So all I can say is it's stuck for now. What usually happens in a narrow rectangle, sometimes you can count a peak A, B, C within the rectangle. If it does that and it gets to a D and then comes back and takes out halfway of the rectangle support, it'll go all the way to the bottom and even take it out. You've got to be careful. So I'm watching this very closely. And let's just go on now. So we'll keep it up there. Now, let's just go back to the ESC. I want to show you this. Look, so that 1-minute chart went to a peak D, turned pink, and the pink went straight to where? The 200-period moving average. The last time it did that, it treated it as a propellant zone. Now let's see what happens. It's going under it. It's going to be a magnet line since the price is probably going down. And you're going to see some activity where it tries to get above. If the 9 and 14-period moving averages cross below the 200-period moving average, it's going to go a lot deeper. So this is the E-mini. The Dow's now down 374. S&P is 43. We're anticipating some kind of a digestive phase, even though we did get some new longs. Not the point. Okay, now let's get to the nitty-gritties of high-grade copper. High-grade copper had a very nice rally. It's given back quite a bit. It's up 0.01 at 5.28. Yeah, it didn't break the left side highs. That's interesting. But let's see if by the end of the day, going in tomorrow, if there can be another test to see if we can get to the 536.35 was the high today. Let's see if we can break that and push even higher, because this becomes G. So that becomes A, B. Remember the letters when you've got a continuous contract. For me, they are sliding. Now look at this. You've got a peak A right there. This is the starting point right here. Right here. All right. And I'll circle it to show you that everything above it gets counted. That's the Chapman wave, the root of the Chapman wave. Oh, come on. What's going on here? Hey, it's enough. Do your job. Hey, what's going on? All right. Well, that should have been yellow. That from here, every single peak gets counted. There's peak A, B, C, another, not lowercase, uppercase on the way up, A, B, and now what we've got is an overlapping C. So that if the price goes above this C, there's a really good chance that it's going to go to a D. And if it goes above in that same single move to the upside, if it goes above 5.3645, the high of the 29th of October, that's an overlapping wave. Overlapping waves usually go to D. And here we've got D. Haven't got overlapping yet. I shouldn't say that. I should check it. Check the high of the 29th was 5.3645, and today's 36.35. We haven't got there yet. 45, right? Yeah, we haven't made it yet. You know, 11 cents, and now we pull back a little bit. So I'm watching this closely because this is both a cup formation, right there, a cup formation, and an overlapping wave, meaning that there was a peak C in this case, and under it you had a peak A, a B, and a C. And once it goes 1 penny, in this case, 0.001 above that, it starts a leg D. All right, so that's very positive so far. That is for high-grade copper. I want to show you something else very quickly. Look, remember we were looking at the E-mini. And I said that 200-period moving average is going to be like a magnet. It's going to go under it and come over it, probably go above it, and then come back and retest it. But this is starting to look, the MACD is just about to turn positive in the 1-minute chart. The on-bounce volume is running. The stochastic has really moved very nicely to the upside. 9-period moving average is still very weak. It needs to cross positive. But this could give you a bit of a rally. And if it can go above 58.31, that's at 58.23 right now, in the next... by the end of the show, by when you get to Steve's show, that'll say, okay, a chunk of this particular down phase is done. Now we have to wait for maybe 310, 320 this afternoon to see if there isn't another sell-off. Well, we'll see what happens. Meantime, let's go back to the SOXS. This is going to be interesting. Remember we were speaking about what happens, and here it is. It went popped above. Now you can start watching it closely. That's A, B, let's see, it's a pity. If there was a D, I'd be able to say something else. I can't. Okay. So, but what happens is it's gone back below half of the rectangle formation. That's suggesting the SOX is going to pull back to 344 if it takes out that support level, and the SOXX is then now going to take its turn to try to break above. Let's have a look. Yep, it's going towards it, but it hasn't broken. That will make it it's at 296.14. 295 would be a nice 295.35 would actually be a breakout and say, now we can have a rally. I'll be back in a moment. Dow's down 345, S&P's down 37.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Oh, so we're back. So a bunch of questions. Let me get to them. Number one, Robinhood. Okay, so Robinhood, this candle on the monthly chart. Whoa, just look at this candle. It's trading down right now, 882 at 190.67. Had a spectacular move from 102 to Friday's high of 129 something, 129.95. So they're giving back a little bit of it today, 129.95. Not a little bit, quite a bit actually, 6%. So I'd say it's quite a bit. So 95. And we are long from way down here. We'll see if that's going to hold. So far, the 9-period moving average I thought would be by Tuesday or Wednesday would go green. It hasn't yet. It's pink. But look at this monthly chart. So there's a technique that I developed a long time ago. Let me just expand this a little bit. There you are. See this candle for the month of November? The perfect Chapman wave Roman candle. Now, we saw this back in 2008 in the S&P. In the monthly chart, I believe the candle was the very same month. But look at this. It's a very simple technique. If we start trading on a week, if there's a weekly close below 118, I've got to consider that the 102.10 level can be retested. This is a whole month they've got to go, December. But if any time in December we squeak just 1 penny above the high of 149.41, that's a long way to go. That's 50 points. But if we're able to do that either in December or January, but definitely if we close above in this particular technique, Chapman wave Roman candle technique, red one, with that long wick, if we're able to close preferably above the closing price was 128.49. Preferably above 130. That I'd say is a good sign. If we close anywhere in the wick, it's going to say, oh, this is not so great for Robinhood. But what's really important is that if on a weekly basis, as it could be this week, if we close below 118, I've got to consider that there's going to be a retest of the 102.10 low that was made on the 21st of November. So I just want to show you a particular technique that's going to be very important because Robinhood represents, look at this, this is Bitcoin. Just the players that go into Bitcoin, the players that go into gold, thank goodness gold is actually running now. So we'll see what happens. And they're playing in everything. So look at this. We've got BTC, Bitcoin, trading down 6,855 at 84,210. I've been pretty negative for months. I've been talking about it saying, that double top that was made at 127,750, and that with very quickly we went pink in the 9-period moving average on a weekly basis. The monthly chart is still good. It's above the inside track propeller zone. I shouldn't say that right now. It's below it. It went below it last month and closed above it. And all I can say is that this has been struggling. I think Bitcoin's in trouble, and I mentioned as a kind of a visual icon, well, visual and verbal icon, Tom Lee. So didn't he have Granny, G-R-N-Y, but I don't think that has anything to do with the Bitcoin. That has something else. Yeah, Granny's actually got the same chart as, no, Granny, not G-R-N-Y. Yeah. Had a very strong pullback from a peak E back in October. It goes from the 26s down to the 23 level. Not a big deal, but it's quite a bit of a pullback. Peak F in the weekly chart. This is a fun straight granny shots, U.S. large cap. But my point was that I'd seen him pumping Bitcoin, and he was very successful at it. And I have tremendous respect for Tom Lee, because he, as an analyst, he's made some very good. I've seen him be completely wrong. That big December smash to the downside, can't remember, was it 2018 or something? He was positive, and that was a big move down. But mostly he's been right. And all I can say is that this Bitcoin, together with Ethereum, everyone's been asking me, not everyone, my subscribers, as well as many people, Tigers in the Den and the YouTube Tigers, have been asking me about it. And I said, no, I don't see anything yet. We don't want to add yet to our position from way down in the IBIT. But if it gets stopped out, it gets stopped out. But we've had some great profits on the little bits we've taken off. And that's just the way it is. So I'm saying let's see what happens here, because it is getting to an area that should be support. This is Ethereum trading at, this is Grayscale Ethereum trading at 25.70, down 2.93. Now, I haven't had a chance to look at any of the questions. I better do that real quickly because we can run out of time. So one question came in. NVIDIA. Said, okay, crypto sell-off, have you seen? Okay, a question there. The VIX index. Thank you. That is a Tiger YouTuber. Let me just show you something. So I discussed this in great detail. Another set of techniques that I used. I said that double top with the VIX index, 28.99, the 17th of December. That was the regional bank scare. Plummets down to 15.62, 27th of October. Whoosh, runs up to a peak E, and I said, I've begun to use my Chapman wave notation, but I don't put lock, stock, and barrel into it. But it's just been working great. And I said that 28.27 lower high from the regional bank scare of the 17th on the 28th of November said, that was everything else. We had regional banks. Then everything else came into focus on the 28th of November. And we went down to under 16 on Friday, and we're popping up a little bit per $1.03 at 17.38 today. So all I can say, on the left side, right side price, time match. Oh, that was it. Yeah. So all I'm going to say is I believe that just from the action of last week, fabulous action, to the trading of this week, now it's more complex. And you can see, because that spectacular move, just a good example, Robinhood screams from 102 to 100, almost 130. Robinhood. I should know that. I just did it, right? To 129.95, just under 130. That's a pretty sharp pullback you're looking at right now, down 8 at 119.85. Here's the other thing with the IWM. Look at this, IWM had a beautiful move going from 228 on the 20th of November to the double top high in the 247 area Thursday, Friday. And it's pulled back today. It's down 238, but it's still holding. And we did start a long position in this because I would say partly because of the rates, but partly because of the rotation that I'm looking at into other areas that the fund managers seem to be observing. And I watch this very closely. We've got to stop. That's all there is to it. If it works, it works. Doesn't work, doesn't work. But look, the MACD is good. The 9-period moving average over the 40 is good. The retro strength is good. Stochastics at 90%. That's good. On balance volume is pretty good. Meh. As a position, I think I'm quite happy. Look at that weekly chart for the Russell 2000. And then a question came in, could I look at IREN? Yes, I'll look at that. IREN, Iran trading down 1.51 at 46.30. Yeah, I'll talk about it when we return. It's worth talking about it because this is in the AI, this is in the data centers. And GPUs and renewable energy. I'll be right back. Dow's down 312, S&P's down 31.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, this is how we wrap up for this final segment before you go to Steve Rhodes. We're looking at the Iran, which is the, as I say, this is, let me just get this chart back again. This is the renewable energy and next generation data centers. GPUs are one of the few that actually makes money, and that's kind of good. But this is a pretty serious pullback, 78.86 on the 5th of November. We're along from the 22s. I thought I would add a position. We did add a position the other day. We got stopped out for like a 1.8% loss, just 1.4, very small loss percentage. We've taken a little bit off, but I did want to add back for a trade. I will do that again, but right now it looks a little tough. That 9-period moving average is struggling to get across. So those old big winners are really we're looking at new leadership. So let me just say that if it takes out 39.52, it's going to be a couple of weeks before we even see it start to really break to the upside. It will be back. They always come back, but that means that it's in for a longer and deeper correction. Then I have to call it a correction, not just a pullback. Okay? So let's just watch this real closely. If we can get by Wednesday or Thursday, if it can even tag 52.30, it says, whoops, nice save. Okay, and that's the way it is right now. The other thing that I was looking at and I had a question about, and I'll do it right now, was there were two things. One is FXI. First, FXI, that's the China large caps, trading up 8 cents at 39.51. Back in the rectangle formation. It's just kind of stuck there. XPEV, I'll do that real quickly. XPEV, I always do that together with Tesla, is down 66 cents, just stuck in the lower range. The 200-period moving average of 19.92 is support. TSLA is Tesla. That is now down a little bit. Yeah, now it looks good. It actually looks like it's in leg C. It's holding very well. It looks like this week is going to try for the 440 level. Now, with that said, we're about to wrap it up. Check my opening call newsletter out. As I said, for weeks we've been getting money together, building a cash position. We've started putting that back to work. We're looking now. We've got the biggies. We want to start getting some single-digit stocks back in. Have a great day. Stay tuned for Steve Rhodes. I will see you tomorrow. Check out my opening call newsletter.